Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 28th of December 2019 and we are reporting or publishing our gold and silver weekly update for the week ending the 27th of December. Gold rose $32 last week from $1,478 to $1,511, having hit a high of $1,515 and a low of 1,477. In sterling terms, gold finished the week at £1,155. That's up £19. And in euros, it closed at €1,352. That's up €18. Silver rose 57 cents, from $17.19 to $17.76, having hit a high of $18.05 and a low of $17.18. In sterling terms, it closed at £13.58. That's up 36 pence. And in euros, it closed at 15.89 euros. That's up 0.37 euros. The gold to silver ratio fell from 86 to 1 to 85 to 1. The Dow Jones closed on Friday at 28,645, up 23 points on the day and up 190 points on the week. And the Nasdaq closed at 9,006, down 15 points on the day, but still up again, 82 points on the week. And the S&P 500 closed at 3,240, up just 0.1 point on the day, in other words, virtually the same, but up 19 points on the week. Brent crude also rose last week. It closed at $68.16. That's up $2.02. And WTI crude closed at $61.72. That's up $1.28 on the week. The dollar index stands at 96.91. That's down 0.78 on the week. So we're seeing a vacillation at the moment between 96 and 97 for the dollar index over the last 2 or 3 weeks. On the 22nd of December, we published our gold price forecast for year-end, where we stipulated that we expected the gold to finish 2019 at or around $1,500, but do not be surprised if it touched $1,525. Well, it surpassed $1,500 and, so far, has held above it, and touched $1,515. It will be interesting to see what it does in the next few days. What is interesting about its rise, though, but did not come as a major surprise, is that stocks too also rose. And we've said that occasionally, not too often, but occasionally, the two do move in tandem one with another. We also pointed out, and this is very important, trading volumes at this time of the year are thin. And so moves both to the up and downside are exaggerated because of this. Now, yesterday's close marks the highest closing gold price since the 4th of November. And whilst, as we suggested, traders were taking profits, a late fall in the US dollar yesterday still managed to push prices back up again. Now, there are two major concerns for traders at the moment: lack of detail about the China-US trade deal, and what it contains and when it's going to be signed, and the potential fear of a stock market sell-off by the year end, not necessarily because of a collapse, but simply end-of-year profit-taking. Now, if we were major traders in stocks, holding on to 30% plus profits or even more in some cases, we'd be tempted, for taxation purposes, to realize those profits, even if we intended to re-enter the market in the new year and buy back those stocks. Now, in the United Kingdom, that practice is called end-of-year rollover, where you literally, in the same moment, sell and then rebuy. Now, from a technical trading point of view, it's important to note that Friday saw what analysts call a doji day, whereby the price of gold closed at the same price as it opened, which was a little surprising, bearing in mind the depreciation of the dollar on Friday. Now, this indecision, which a doji day is normally interpreted as, is not surprising in view of what we did mention earlier. Markets are looking for direction, and only the brave or foolish are really prepared to make major positions until there is more certainty. Now, we have two major support levels for gold. The 10-day moving average of 1488 and the 50-day moving average of 1477. Resistance is seen at November's high of 1516, and the next resistance level is 1525, which is one of the reasons that we stated we could see gold going up potentially to that level. Now, the technicals too are also somewhat confusing, having said all this, in that the 10-day moving average crossed above the 50-day moving average, which suggests a short-term uptrend is in place. But the fast stochastic is printing a reading of 96, which is important because a reading above 80 suggests an overbought position. So 96 is considerably higher than 80. So one can see why traders are skeptical to take a prominent position right now, especially when volume levels are so low, and they appreciate that because of these low volumes, prices are exaggerated both up and down. Now this brings us nicely onto the clickbait headlines we've seen of late, and we're sure you've seen them too. Gold surges. Silver prices rocket. Gold markets explode. Blah, blah, blah. A few percent rise is neither an explosion nor a skyrocketing. So please do not be fooled by these headlines by those YouTubers just attempting to earn a few extra dollars in Google AdSense revenue for Christmas. Now, it was interesting, though, having said that, in that one of our highest viewing videos in the past few weeks was the one that we ourselves used the term silver prices surge as we approach our 2019 year-end forecast. There is something fundamentally psychological about these key words, which unfortunately those who study NLP, neuro-linguistic programming, use with repetitive success, or repeated success. So, when we use the word surge, for us, it's less than an explosion or a skyrocketing, but represents a quick and moderately significant upward or forward movement. But please do not be fooled by the majority of people who use such words. They're playing with your minds. Now, having said that, silver did rally last week and perform very well indeed, having risen 3.3% in US dollar terms and 2.7% in sterling terms. You see, a surge, but not an explosion or a skyrocket. Now, it is currently at an important level. It is using the bottom of the uptrend line as resistance. And if it breaks through this, which is between $18 but edging more towards $18.05, then silver could easily surge, there's that word again, to $18.50. Technically speaking, it's not out of the ballpark that it could then eventually, not immediately, but eventually climb to $20. And whilst we would not rule this out for 2020, right now, our opinion is, short term, it is more than likely that silver will continue to hover between this $17.50 and $18 level, closing, as we predict, closer to $18 than $17.50. Now, we stated last week that we should be able to glean a more accurate picture where all of these prices are heading short term once traders return on the 6th of January, return fully and properly, where full and complete trading resumes again. So, let's take a brief look at what economic information is due to be released this week, and there is some. On Monday, we have the advanced trading goods for November and pending home sales for November. On Tuesday, the consumer confidence index for December. Now, nothing is scheduled for Wednesday as it's New Year's Day. Thursday, though, market manufacturing PMI for December, and on Friday, the ISM manufacturing index for December, construction spending for November, and motor vehicle sales for December. Now, none of these are going to have huge impacts, or are not likely to have huge impacts on precious metal prices, but the manufacturing PMI is important, as in the ISM manufacturing indexes. Now, most of the data published last week were, quite frankly, more or less in line with expectations, either being as predicted or very marginally above or below, but no major outlier in either direction, though we must admit personal income levels for November came in at up 0.5%, compared with an expectation of 0.3%. And against October's figure of 0.1. So this was the largest difference and suggests potentially at least there is the possibility of more spending ahead as personal income levels have risen. Now, we have published already where we believe both gold and silver will end up next week, and we've placed links to these videos in the description box below. Now, tomorrow we're producing a very important video podcast as to why the 31st of December is an important day economically and could potentially have a profound effect on precious metal prices moving into 2020. Potentially, depending on what happens on the 31st of December. So please do not miss that one. Meanwhile, have a great weekend, and later today, probably in about 5 hours after this video is published, we shall be publishing an interview we had earlier this afternoon with Journo Marcus, where we very briefly discuss Brexit, but focus more on US trade and the media. Now, whilst Marcus and controversially Greg conduct a weekly podcast for Inner Sanctum members, I very rarely interview him personally, and so would strongly recommend, if you can, to set 20 or so minutes aside to listen to what he has to say. He really is a most bright and articulate young man who is well connected to media sources, which we have used on occasion to considerable advantage to our subscribers, without, quite frankly, anyone even being aware of it. So we hope you enjoy that podcast and interview, and meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. And I shall now have more time over the coming days to answer a lot of the questions that have been asked, and wish to apologise for not having done so over the past week or so because of personal commitments. Thank you so much for listening. Have a great weekend. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.